Welcome to this step-by-step guide to Betterment historical returns. Betterment is a popular robo-advisor that provides investors with a low-cost and efficient way to invest in the stock market. To understand how Betterment performs over time, it is essential to review its historical returns. Step 1 is to visit the Betterment website and navigate to the performance page. Here you will find a detailed breakdown of the historical returns for each of the available portfolios. Betterment offers a range of portfolios with different asset allocations and risk levels. Step 2 is to select the portfolio you are interested in and review the historical returns over different time periods. Betterment provides returns data for 1 year, 5 years, and 10 years. This will give you an idea of how the portfolio has performed over the short and long term. Step 3 is to compare the historical returns of the selected portfolio to a benchmark. Betterment provides benchmark data for each portfolio, which allows you to compare the performance of the portfolio to the overall market. This will give you an idea of how the portfolio has performed relative to the market. Step 4 is to review the fees associated with the portfolio. Betterment charges a management fee for its portfolios, which can range from 0.25% to 0.4% per year. It is essential to consider the fees when evaluating the historical returns of a portfolio. Step 5 is to consider the risk level of the portfolio. Betterment portfolios are designed to balance risk and return, and the historical returns will reflect this. It is essential to consider your own risk tolerance when evaluating the historical returns of a portfolio. In conclusion, reviewing the historical returns of a Betterment portfolio is an essential step in evaluating its performance. By following these steps, you can gain a better understanding of how a portfolio has performed over time and make informed investment decisions. Remember to always consider the fees and risk level of a portfolio when evaluating its historical returns.